R&D and technology-driven operations. So from the management, we have Mr. Reddy Ramachandra, the promoter, whole-time director, and CEO of Midwest Limited. He brings over 20 years of industry experience, driving execution across cost optimization, resource efficiency, and marketing. And under his leadership, the PAT grew 97.5% between FY23 and FY25. Also, we have on the panel Mrs. Uma Priyadarshini Kollareddy, the promoter and whole-time director, who shapes the company's strategy, leads the business planning, joint ventures, deal structuring, and fundraising. Thank you, and over to you. I just and we will also soon we'll also be joined by Mr. Dilip Chalasini, the CFO and founding member of ICAI with IFRS certification. So he brings over 2 decades of financial expertise to Midwest Limited. We'll quickly run you through the video to explain things better.
Imagine a simple Indian village, hiding the secret to a premium high-demand granite in the world, black galaxy granite. This is where Midwest's story begins. Founded in 1981 by Mr. Raghavan Reddy, Midwest set out not just to mine, but to reimagine how natural resources are processed and shared with the world. Today, it stands tall as India's largest producer and exporter of black galaxy granite, and one of the largest producers of absolute black granite. Our 20 mining operations hum with activity, are mechanized and incorporate advanced engineering and process optimization. Midwest's mine-to-distribution capabilities span across the dimensional granite value chain. As the granite makes its way from the mines to our processing units, the transformation begins. Advanced diamond wire technology slices through stone with precision, creating slabs ready for the world stage. Midwest's market spans 5 continents and 17 countries, with exports driving 56.97% of our FY25 revenue. Midwest has a strong track record of sustained growth and profitability, with strong sales visibility, typically backed by customer advances. Midwest's journey extends beyond granite to quartz, leveraging its organizational expertise in an otherwise unorganized, fragmented industry. Backed by 23.3 million ton quartz resource and our phase 1 quartz processing facility, Midwest will become one of the few players in the world that incorporate a mine-to-market integrated business model for production of quartz grit powder. Midwest is poised to meet 11 to 13% of India's quartz demand in fiscal year 2030. The possibilities are vast, from engineered quartz slabs to solar glass, semiconductor, and more. Midwest's heavy mineral sands venture aims to unlock materials like rutile, ilmenite, zircon, garnet, and monazite, essential for industries such as titanium pigments and rare earth elements, powering permanent magnets, EVs, and advanced materials. Innovation powers Midwest's growth. From co-developing electric dressing stations with an Italian partner to piloting electric tipper trucks back integrated with solar, we continuously improve safety, efficiency, downtime, costs, and sustainability of our operations. Our Diamond Tools research team enhances cutting efficiency and tool longevity by refining key material compositions. But what truly defines us is not just our achievements, or even our innovation. It's our people. And that first board, led by independent chairman Mr. Rana Song, works alongside experienced promoters Mr. Rana and Mr. Rana and Mrs. Gu, who are taking the legacy forward, and a professional management team, all committed to upholding the highest standards of governance. In unison, we've created a company that's not just profitable, it's purposeful. We believe in responsible mining, land restoration, and reducing emissions, all while giving back to the communities we operate in. This is our story, where every block of stone, every grain of quartz, and every ounce of heavy mineral sands shapes a brighter, more sustainable future. At West, we're not just mining and processing materials, we're processing the future responsibly.
Hope you all can hear me. Thank you for taking time out and coming to hear our journey and to hear our vision. In essence, just to give you a brief background, because it's the first, investor meet post, analyst meet post our listing. I thought I should give you a brief background of the verticals we operate in. We started off as a natural stone mining company, and we consolidated the industry. It's a very fragmented and unorganized sector. So with a lot of focus and with organic and with a lot of aggressive acquisitions over time, we become the largest in the space. We have over 62% export market share with a 27% EBITDA margin edge. And we operate in only two major products, black granite and absolute black granite and black galaxy. Now, black galaxy, the uniqueness is it's available only in one village in the entire world, and we are the largest deposit holders for that product, and 62% export market share, like I said, highest royalty players in the state for the over 100 crores of royalty paid in FY25. And the good part is these licenses are given for 25-year extendable for another 25-year sort of timelines. So because of this, we are not looking for business year on year. Like we don't have to fight for tenders year on year. Look from where our business is coming from. This is recurring business based on our production, and the quality of earnings, visibility of our earnings will be very high because most of our sales, like the vast majority of our sales, are done against interest-free advances, and the remaining is covered by 100% LC. So there's no open credit that we offer to our customer base, and this is a long customer base, been our partners for several years. We are given our scale, we are 6 times larger than the second largest player. So this is an industry which we focused on, became the largest. It's the scale had come because of relentless focus over the years, and now we've attained the leadership position with the market in 17 countries across 5 continents, and a strong sales visibility, good ratios as well. The second vertical now as a natural progression for us is quartz raw material. So we produce quartz grit and powder. It's mainly services two industries, engineered stone and solar glass, the glass that is put on the solar panels. Now, it's a very natural course for us because a whole lot of our granite processing units that depend on our material for their capacity utilizations. We're very happy with the material that is the quality of material that we deliver, the time commitments, no volatility in pricing, and dealing with an organized player remove their uncertainty in raw material. So the same problem they were facing, like there are only 3 organized players, raw material suppliers, in supplying quartz grit and powder. And given that there are only 3, less than 10% of the quartz slab producers are serviced by these 3 players. So the material, the raw material, the quartz powder either comes late or that there's quality inconsistency. And most of these slabs are sold in credit, which means they don't get paid if there's a quality discrepancy. So it's not a price sensitive product. They're ready to pay a higher price for higher quality. Also in the hub of Andhra Pradesh or Hosur, where a whole bunch of these industries exist. The material comes all the way from Rajasthan, from Ajmer. So the transportation cost for bulk commodity is very penalized. So there was no unit in the south at our scale producing that's supplying to these raw material producers. So either the material comes late, or there is price volatility, or there's quality issue, or there are it's a fragmented mom and pop sort of miners. So today they take advance, tomorrow the mine is not operating. So you cannot run your plant based on raw material inconsistencies. So the problem statement came to us telling that you have a strength of mining and processing. So please consolidate this market for us. So once the problem statement was well known, we went acquired quartz mines resources, almost 23 million tons of this resource we acquired, and now we have a consistent supply of raw material for our plant. So given this confidence, we were able to build a 303,000 metric ton per annum plant. Our competition, again, the second largest, which is an MNC, is producing 60,000 tons per annum. And that too, because it has an international marketing office, there is barely any material that is available for Indian customers. Most of it is again exported out. So given this scenario, they were not getting any consistent supply. So we started with a phase 1 plant, which is in production now, in the hub of slab making units. More than 303,000 metric ton per annum is the capacity. And the units are just opposite our factory, or diagonal to our factory, to our processing unit, which means that the bulk commodity, the transportation cost is completely saved of 4,000 rupees a ton today currently to bring it from Ajmer. And the bags refilling happens, with the same bag being refilled, so that saves another 200 rupees. And you have, the inventory boarding from anxiety of availability of this product. It saves financing costs. So given that, we are able to service our zone very well, and there are a couple of other zones as well. And we are also very close to the port. So we are able to take export market because there are several countries where these engineered stone slab manufacturers are there, but they are net importers of raw materials. They don't have raw material in their country. So we are able to be close to the port. We are also able to take the export market. And so the beauty of this plant is it's not just integrated with mining and processing. There are also two products that come out of this plant. One is for the engineered stone people and the customers, and the other product, which is again a byproduct which is further processed, is for solar glass. Now, this is the only factory at this scale within India to provide for two products from the same plant. So the cost efficiency is if you load the costs onto the engineered stone, the byproduct is all is the operational cost only. So that's on the quartz side, and we have the third vertical where which is heavy mineral sands. We have acquired some licenses in Sri Lanka, wherein titanium-based minerals like ilmenite and rutile are extracted. We plan to put up the processing unit for concentrate plant and a separation plant, and separate these minerals out from the sands. Given our expertise with the geologists and strength of our team, we were able to choose the best deposits with a high yield of titanium-based value minerals within the sands. And also the assemblage was better, where the proportion of rutile is higher than the proportion of ilmenite, wherein in the basket of portfolio of products that you bring up, the cost of rutile is a lot higher than the ilmenite. Now, the margins, of course, are very encouraging because there's a listed entity called Iluka that is mining heavy mineral sands in Australia. They have posted a 42% EBITDA margin, and I suppose the costs in Australia uh, are higher and the yield is slightly lower compared to Sri Lanka. So efforts are there where we have the raw material which we will extract, and there is a lot of scope, for a larger vision down the line, wherein ilmenite can be used for making titanium slag, which can be again rutile will be used for titanium dioxide, which are pigments into the paint industry. It can be used for metals, alloys. For lightweighting of those, and there's also byproducts like monosite, which are now getting into the rare earth supply chain, which everybody is, which the world is looking for an alternate source from a Chinese source. So phase 2 plant also will be coming up, where we'll be doubling our production from 300,000 metric tons. Another, again, primarily that will be servicing the solar glass manufacturers in the south, because there are a lot of plants that are announced for manufacture of solar glass in the south. So that's the stone, the black with the gold spots. Again, it's available. If you've seen, it's the source of origin is only in Andhra Pradesh in Chimakurti village, and you'll see it all across the globe. This is the powder, the quartz grit and powder, which is used for making engineered stone slabs, which we supply to the engineered stone slab makers, and also it goes into the solar glass production. So these are the minerals, the rutile and ilmenite, which are titanium-based value chain materials, and one can go downstream. And the monazite again, which is a byproduct of these sands, which comes in less than 1% occurrence, and this is downstream for EV motors and for windmills and anywhere where electric energy is needed. Now we take R&D very seriously because we constantly work on reducing our costs per cubic meter mined. And that's where our EBITDA margins are above 27%. An example would be our foray into using of these electric dump trucks. We are the first in the country to start using these electric dump trucks in about 4 years ago when we started looking for solutions. We want the energy cost and the manpower cost is our highest expense heads, and manpower, of course, we are mechanizing as much as possible, but all the efforts were in delinking ourselves from diesel dependency and trying to electrify our machinery and also integrating with solar. So these efforts were there. So whatever is a low-hanging fruit, like the compressors, the smaller ones have been changed, electrified. But the larger ones, like the gas guzzlers, like the excavators and all, we're still waiting for solutions. However, we didn't wait for solutions to come. So we went actively, looked for system integration for these electric dump trucks, and we looked for German and Chinese solutions. And finally, we got an electric dump truck re-engineered from us from the left-hand drive to the right-hand drive by the Chinese company that is owned by GIA, the parent company. And it's a very, of course, now there's no technology of this because these trucks were plied on Chinese roads for quite some time. And the beauty here is that when we import, we don't have import duty because we are 100% EOU. So the cost of this truck is similar to the cost of our Volvo truck, because we use Volvo trucks because our downtime should not be, we are penalized by the downtime on maintenance. So we go for very reliable Volvo trucks. So now these are costing exactly the capex is slightly cheaper in fact for our electric dump trucks compared that we are importing compared to that we will be importing compared to the Volvo diesel IC engine trucks that we are flying. Plus, of course, when you spend the vehicle, we do 3 shifts every day. So when you spend the vehicle, the cost of OPEX savings are much higher than any slight increase in capex that you put in. Of course, our capex is also lower, but so now we're spending the vehicles 80 trips a day, so then we're saving on diesel, and of course we are integrating solar and again serving further on the electrification costs. And of course, the byproduct we're going green. We are proud to say that we're going green, one of the first in the country to move towards this whole electrification of the dump trucks. This is an example to say how we don't wait for solutions and we go and system integrate and find our own solutions. That for the problems we are facing. Another example is the squaring and pressing machine. We are the ones that co-developed this with an Italian company for squaring of our blocks, for reducing our production times, for again it's an electrified machine, so again it reduces our diesel dependency. And the examples go on. Yeah. We can go for
Sure.
our CFO is supposed to come to take over the finance section. But I think we can go for Q&A.
Hello, my name is Manish Sostwal. I'm from Minimum Securities. My question on the mining license is it's a highly regulated industry. So first you can talk about the time period which we have remaining time period for our mines. Mining, you acquired some mines in Sri Lanka also. So what is the strategy over the medium term? And bidding for participating in the mine auction in different geography. So can you talk about so that we can think of where the company heading in terms of acquiring these assets, which ultimately drive the volume for the company?
Sure. The current regulations are slightly different from mineral to mineral that we're dealing in. Let's say first the natural stone, the granite. This is a major mineral. Major mineral is governed by the state's policies. We are primarily located in two states, Andhra Pradesh and Telangana. And we are in this space, we are not looking aggressively to increase our reserves because we have enough for the next few decades. The acquisition will be based on strategic requirement and if there's a value proposition in place. In the license, we have a combination of two categories of lands, private lands and government lands. The mineral always belongs to the state. It's owned by the people. And the governments are entitled for the royalty which is fixed for that mineral. The surface rights can differ. Surface rights can be private as well as government. In a private surface rights, the advantage is since you own surface rights, typically, unless you give NOC, nobody else gets a lease. And in government can, at the end of the renewal periods, in these states, typically we are looking at 20 plus 10 in one state, then similar to 25 plus 25 in other states, more or less. So after 50 years from the initial date, after the second or third renewal is finished, the governments can look at the policy at that point of time to determine who takes the government land. But as a company, we are diversified there also. In Black Galaxy, we are having close to 4 leases, and in case of BlackNet, we have close to 6. So there's a great diversification. Different lease periods have different timeline. So our oldest lease, which the company has got active lease today from 1989, is going to come for expiration 39. So that's where we are. The youngest lease is as old as last March. So we have 50 years to go. On the quartz front, during our journey in the last 5 months, quartz was also a minor mineral with a similar policy in place, but that has become a major mineral. So government of India has usually takes this call when they see something strategic that country needs, and they need governance at the highest level of the policy without each states having different policy. That is coming primarily because quartz is going to be the feedstock for downstream industries like solar, semiconductor. All these industries need high quality quartz. So given that, they made it a major mineral. So what changed as a company? So all the leases or reserves that Uma was just mentioning we had prior to becoming a minor mineral stays, but the advantage is we don't get into this 20 plus 20 plus 10 or 25 plus 25, but we straight away get a 50 year lease. That's what the major mineral policy governs. The second change, which is what is affecting or what will be effective for us is state governments primarily fix the royalties on the volume, rupees per ton. Central government follows a different mode altogether. They follow percentage, ad valorem based. So coal is 4%, iron is some percent. They have everything. So given that the shift of 200 rupees per ton is the royalty structure in the states we operate today, that's a change to percentage. And our view on that is once you translate that X mine value to that percentage, pretty much will be in line to where we are today. On the third mineral, which is the heavy mineral sands in Sri Lanka, so the our outlook there is Sri Lanka is well known to have the richest heavy mineral sands in the world, reported everywhere, and the country has struggled for past years because they were also like India tying up these resources to government companies. They wanted the government companies to be more active, and for the first time when we got these concessions a little more than 2 years back, that is when they took a call that we want the private enterprise to be more active, and that's when we were there. And you would have seen a diamond tool presentation in the presentation. So that unit was in Sri Lanka for us for almost 16 years before it shifted to India. So we are active in Sri Lanka. We know the country well, and we are very bullish on that country. And strategically, it is not that business is not only important for the company but also important for India and rest of the world because the byproduct is monazite. So there the plan is, so the regulation is very similar. You get a mining license for long duration, but there more than mining, the stress for us will be on the plant because sand has no value unless you extract the minerals out of it. So we mine the sand, we separate the minerals through concentration plant, then we separate these minerals mineral by mineral. You see those 4 or 5 minerals, and our plan right now is to take out one mineral out of it, which is the monazite, and actually make rare earth oxides. So that is what we will be doing, and whether that location of that plant is not detailed yet. So as a company, we'll be producing the lignites, rutiles. We'll be selling as they are, but also we'll be producing rare earth oxides. So that is where we are being a part of the rare earth challenge. And so any company taking oxides from us can make metals, alloys, permanent magnets, motors, whatever.
Basically, 3 to 4 years you said in mission answer like the you'll be remaining geography ones where you are in Andhra Pradesh and the second state of no other geography you want to pursue. Am I understanding correct?
So as being a exploration and mining and processing company and the strategic resources, we have a team of close to 10 in-house geologists. They're always usually active on the go. Right now, these are the projects which we have going to capex out. But there is a constant exercise of our guys looking at some projects in Australia, some projects somewhere. It's primarily focused on right now only on heavy mineral sands and monazite. We have quartz in India. We don't need to go for. We have granite in India, the only granite, and we don't need to go outside. So we'll be exploring a lot of projects. We have exploration budget, which is R&D for our company. And whenever we feel that certain project has a commercial value and we can build up a project there, we will look at it. But right now, these are the active geographies.
Yeah. Second, you in your presentation you mentioned 3 crores of capex. So how we are going to spend money in next couple of years, year by if you can detail out and how we are financing that.
So the expansion of quartz, doubling the capacity, we are going to spend 120 crores from the proceeds of the IPO. Then we have another budget outlay of electrification of trucks. We have around close to 12 or 14 trucks coming out of there, out of the IPO proceeds. We have a small captive solar plant there, and the rest of the capex, which is going to come up in Sri Lanka, specifically for the concentration plant. We have options. We are looking at leveraging the balance sheet to take some debt instead of equity for now. And going forward, we also have internal cash flows that will support. It will be part debt and part internal cash flows. So most of the cash flow is going to be reinvested into these new projects. And obviously, any other new project coming at any point of time, we look at from project to project.
In view of the balance sheet leverage, how much you are comfortable?
So right now we are very comfortable. I think the exact ratios you have looked at, but we are very
Right now, the balance sheet is quite good. I'm saying at a medium term level, what's the maximum leverage you ready to take?
So, for example, part of the IPO proceeds were actually paying off some debt now. So, close to I think 70 or 80 crores. So, if even if you are looking at taking further debt of 100 crores to Sri Lanka, we'll get similar ratios with a healthier balance sheet. So, I think the ratios pretty much we will be maintaining based on existing projects. The ratios will only go either way if a new project is coming up, which is very exciting for us in HMS and rare earth space, which you don't want to miss out. Otherwise, current plans will be in line to where we are.
Now, talk about the rare earth. We are hearing a lot of things from the government as well.
Government want to push to increase the self-reliance on that mineral. So what is the capability we have built and how we can participate the new vehicle from the government policy standpoint, and what we can expect from Midwest to take participate and create a good business case for us.
So the capability we have built in-house is right from extension of what we are always doing, which is exploration, mining, mineral processing, extracting the monazite out. The second capability that we have built is extracting that monazite and taking oxides out of it. Now, if you look at the policy that the government has introduced, the PLI scheme is primarily for magnet manufacturers, which go into EV motors, your MRIs, your defense, different industries. And the oxide to magnet is where the PLI is coming. But to get a little bit deeper into that scheme, the scheme is for 6,000 tons per year, distributed over 5 companies. The scheme. Now to produce if India has to produce 6,000 tons of permanent magnets at the end of 2 or 3 or 4 years, whenever that happens, India will be needing close to 2,500 to 2,800 tons of rare earth oxides. Today, as a country, we produce 400 tons. And so we have a long way to go in securing those oxides. Where are we going to get those oxides from? So that is the challenge we are trying to address. The other luckily India has the minerals, we don't have the material. So India will take a lot of these minerals. There is a lot of feedstock available on Indian East Coast. Crude monazite is available, and we will be looking at how to take those monazites and convert it to oxides. And I think more or less we'll be able to be self-sufficient for that. 6,000 volume is what I feel, but still it's a very small number because global oxide production as we speak, rare earth oxide production as we speak, is close to 60,000 tons. We are at 400 tons, and China produced 56,000 tons of that. So I think we have a long way to go. And what we are also missing is it's not just about the mobility defense and all. Every electronic, like every iPhone, due to haptic, and every device which has a sound in it, including AirPods, need these permanent magnets. So if you want to develop all those downstream industries, electronic manufacturing, go to high-tech manufacturing, any of these industries, this becomes very critical. And our role will be technically and commercially looking at all the projects which we can produce the oxides.
Because right now there is a PLI for magnets, but where are they getting in the raw material farm? It should have possibly come on the raw material side first, and then the raw material is out for the production.
Yeah, so government is well aware of it, and I think they are looking at how to bridge that gap also. And I think it's a very great move to start somewhere. And I think once this other loop is also tied, we'll be self-sufficient.
Thank you, sir. Thank you.
Thank you. So firstly, congratulations. Hi, this is Navit Arora from Ingrowth Capital. Firstly, congratulations to you for the listing recently. Great milestone. So many compliments to you and the team. Thanks for coming here for the session, and thanks to the Go India team for organizing it. My question is specific to the new verticals. The HMS, HPQ, and the rare earth minerals. Now, given the attractiveness, that may possibly attract a lot of competition as well. But you have had a head start. So if you could give us some color on the market opportunity, I understand is quite large, but how are you positioned given that several other competitors may be trying to pursue the same three verticals?
Yeah. So I think there is enough for everyone because of the tailwinds that we see, and we really don't know what other companies are doing and are into. But what we are focused with the head start is trying to capitalize as much as possible in terms of acquisition of resources. Like for example, I'll just give an example, right? I mean, a year before, if we had this call, we would have an outlay of 50,000 tons per year plant in Sri Lanka. Right now, I've doubled it to 100,000. And again, looking at how to go to 50,000. So those are the that is where our time is being spent now, and how quickly we can get there. And in terms of know-how, there is a long way to go. If it is us or other companies, especially from monazite to oxide, I'll just give you an example. Yes, we can produce oxide from monazite, but at what efficiency? China is at 96% efficient. Next milestone that we'll be looking at, how much are we able to extract, what is the process efficiency and all. We have a long way to go. But I think we'll be very busy, so will a lot of companies. Every company will have the strategies. But I think the next milestone for us will be to look at the project like Sri Lanka in India, because we have a long coast, we have a lot of resources, and government. It's a matter of time that government will open up. It's a policy decision. They might also already be in the works. So there is there'll be a lot of licenses, 15, 20, 25, I don't know. Even if you're able to get a few of them, I think that Head Start will help us there. And today, by being listed, we have the privilege of access to the capital markets anyway, and we are even playing field now on that front. So I think we will not let any stone unturned, and I think exciting times.
Thank you. I have two other very quick questions. One question is your in-house development team, whether it's research, engineering, process, etc. How is that currently staffed, and are you augmenting it, given the pursuits of these new verticals also? Some color on the in-house team on the research, development, process engineering side. And the second question is around you have multiple verticals currently, and you'll have more given these exciting markets. So how is management bandwidth to be able to handle all these opportunities in parallel? Thank you.
Actually, this is a very relevant question because the talent available is so scarce in these emerging advanced technologies. That is where the challenge is, and that's where we are spending our time trying to beef up the team's capabilities. Now we've got the only company, only three companies outside of China that are having experience in this particular field. We got the R&D head of one of those companies. He's worked in this space in the R&D division, making monazite to oxides for almost his entire life, but 10 years even abroad in different countries. So he's come on board, and we are also working on our ESOP pool and all to ensure that everybody is well incentivized and aligned with the company's goals. So a lot of time is being spent on getting the head. Will also get some of the juniors in line to the organization. That's been happening. We are beefing up and giving some formidable competition in the quality of people, and that's happening because of our listing, because we are able to give ESOPs, and that's of good value to attract the people. And management bandwidth, it is around the CEO, and we've developed our CEO, CFO is supposed to be here. The flight got delayed. He's probably on the way. We have some excellent people. Thanks to the IPO, we were able to beef up our team and management bandwidth, and we both spend our time in investment.
Thank you very much, ma'am. Thank you, sir. All the best to the entire team. Thank you.
Yeah, hi, this is Hitesh from Power. My question was on the margins. The margins are pretty healthy at 29%. So can you break that up vertical wise in the three verticals?
Yeah. So the granite has been at 27%, and it's a fine balance between the yield recovery, because it's a natural stone, and between delinking ourselves from diesel dependency, which is again volatile and increasing per liter. So again, with scale, this is all kept in check. So we are assuming that the more electrification that happens, and better tools we make with the faster cutting tools, the larger product, the quality of the diamond cutting wire that we use lasts longer, cuts faster. So with the the way we look at margins is how much it's costing per cubic meter that's mined, and that is going down as the inflation is increasing. But for us, it's going down internally. So we are happy about that focus on EBITDA margins, and it's been 27%, and slightly could go 1% higher or so as we electrify our fleet. And in the margins of engineered stone, like I said, it's not a price sensitive product. So because our customers sell on credit, for them the quality is everything, so they're ready to pay a price. Plus, we are saving on our transportation costs, so we are getting a good price. So the EBITDA margin for the quartz expectation is that it's higher than granite. And the solar glass, again, the grid that is needed for the solar glass industry, that's again a byproduct for in the phase one, which means the sale price is pretty much the margin if you look at it. So the margins are much better as we go into processing of higher value higher value materials, wherein we are using our expertise of mining to secure raw material for our processing plants. So now the focus is on processing of these advanced materials. So and then the third vertical is heavy mineral sands, and again the byproduct is monazite. Now the cost of monazite, if you see, because it's a byproduct, and plus the selling price for a non-Chinese material, US is giving support pricing for $115 per kg. So this is per kg material. We're not talking about per ton anymore. So now per kg it's 110, whereas the Chinese index is at $70 or $80. So which means for a non-Chinese material that we mine in Sri Lanka, the US is ready to pay a much more premium price. So when your cost is a byproduct cost and your selling is at $110, margins look really encouraging. And if you can see the margin profiles from comparative in companies like Alliance for rare earth oxides, or an Iluka for heavy mineral sands. Like Iluka has reported a margin of 42% EBITDA margin, and that's again an Australian company. Now we are operating in Sri Lanka. We assume the cost to be lower, and our yield is at 9% in Sri Lanka, whereas in Australia the yield is 3%. So economics are encouraging. Thank you.
Have any runway for improvement at the overall company level? It's at 29%, so you still see scope for improvement. Is there any?
Yes, so blended margin will be on the higher trajectory. Given that each vertical we are entering into is advanced materials again, which is again bolstered by our mining capabilities, wherein the raw material supply security is there at a very competitive price. So, like the margins, as and when the production starts coming in, you will see an uptick of margins.
Currently, what's the breakup of the top line in terms of three verticals?
So currently, it's primarily from natural stone. The production for the quartz plant just started this quarter. So phase one of 300,000 metric tons has started, and you'll see a quarter of earnings coming in. And then you'll see next year, you'll see the entire year, the full capacity utilization will be there for this plant. And phase two also now we'll be starting to order the machinery from phase two, which will primarily cater to the solar. So then we are doubling the revenue from quartz that you will see in FY28.
So what sort of guidance should we see like in terms of FY27 numbers and the top line and bottom line?
So broadly, what you can factor is in terms of the national stone business, we'll be growing at historic pace, whatever you have seen in the last 3-4 years, in line with that, more or less. And the quartz is a new business. The next full year, our capacity is 3 lakh tons, but the production at 80% throughput, we are anticipating anywhere between 240 to 250,000 tons of product for the full year from the phase one. And today, if you see the average blended price between engineered stone and solar glass, since you produce both of them in the same plant, is around 10,000 rupees per ton. The second phase is a similar mirror, only the product mix is slightly changing. So in there it could be around 9,000, 9,500. But after both the phases, you're looking at 500,000 tons of quartz. So that will translate to that number with hopefully on paper it is looking a little better EBITDA, but we don't have the number yet exactly.
My last question is, promoter holding is 77%. So how much time you will have to bring this down? I think you will bring it down to 75.
We were told 2 or 3 years. We have to get clarity on that amount.
Yeah, I had a question, just taking forward from the earlier participant. If you can even clarify a little bit more on your top line growth. So if I see the numbers, the last 3-4 years, the top line growth has been 5-6%. Of course, there's been a huge EBITDA margin expansion, so EBITDA has grown faster. But if you take the next 3 years, it's still very unclear how does this top line growth really change in terms of a higher trajectory. And out of the 3 segments, how do the revenues really pan out? As in, when does Sri Lanka actually start generating revenue? What can be the revenue potential from the solar, raw material part which you spoke? I think a little bit more clarity on the revenue build out next 3-4 years would be really helpful.
Sure. So natural stone, we're comfortable with a 10-11% volume increase plus our average price increase, whatever that was there historically, that is 3-4%. That will be the CAGR, let's say, you can over the next 3 years. On quartz, it's a new business, and when both the phases come in line, let's say FY27 first phase full and FY28 second phase also full. Each phase will contribute close to 230 to 40 crores of top line, so that's into 2 of that number. Heavy mineral sands, we are about I would say 15 months away from revenue, a quarter this way that way. And the phase 1, which we are going to build a plant of 100,000 tons of concentration separation plant. Today, the blended price, today, as we see, look at the weighted average of the minerals contained, ilmenite, rutile, zircons and all. And today, if you look at the blended average price, will come close to $400. So that will give you the around what are the dollar prices then around 400 to $100,000 top line from the approximately from that 100,000 ton plant. In terms of monazite, we are taking the monazite value zero from this plant. That's a separate project wherein we plan to convert the monazite into oxide. So 100,000 ton plant typically will give you around 800 to 1,000 tons of free monazite out of that plant, and that you convert it to oxides, that will translate close to 300-400 tons approximately per year. And today, as we speak, the oxide price is 70-80 whatever. If you take that 400 into the $60 per kg or $70 per kg today conservative price, that gives the revenue on the oxide plant. So these are the levers in place. This is what the visibility is for the company. And so maximum growth is coming from the quartz immediately, and then midterm from the heavy mineral sands and monazite oxide production.
And any restrictions in Sri Lanka in terms of exports and so on and so forth? Like, do you have to use the end material only in Sri Lanka? Can you export it freely anywhere?
So there are no downstream industries as of now in Sri Lanka for them to utilize this material. So we mine and we send out the concentrate and the separated minerals. Each one of them is benchmarked, and we pay a royalty of 9% towards the market value of this material's ex-mine price, and then we ship out the material.
Thanks. Hi, Yashwant from KL Chokshi. So my question is regarding the HMS segment. Since you are developing capabilities in-house for mining and processing among various other techniques that are involved during this process, so are we open to the possibility of global tech collaborations or tech transfers in case if we don't have the capabilities for a particular scale? So what are your plans regarding that, and if so, how much of margin compression would that have?
So we are always open but fortunately, extraction, sand mining, concentration of the sand and separation of sand is a well-known skill in India. There are a lot of companies who have done this, mostly state-owned companies, obviously. Few private companies also have done it in certain tenure of time. So we didn't find it challenging. And the another advantage that we have of being in Sri Lanka, uh, we are also likely to look at a EPC contract from China. It's a free movement of capital, free movement of people, and China does it most efficiently. So we, as a company, feel that learn from the best practice, which they are today the best practice. We have a lot of talent in India anyway, and then quickly ramp up with Indian skill. So that's the complementing. So in India, we built a plant of 30,000 tons, 40,000 tons. Now this plant is 100,000 tons. In China, it's a million ton plant. It's a very small plant for them. So and they do stay in India. So the operational efficiency, the sizing of the equipment, all these things, those science is known to us. There is a skill. The scale up is a missing element which can happen. So that is where we will take collaboration from a vendor point of view, not from technology point of view. Whether the vendor is from China or Taiwan or Vietnam, it really doesn't matter for us. That is what we will try. We are trying to blend that and do the layout, and to ensure of that as quickly as possible, it becomes a globally efficient plant. Instead of we don't want to get the learning curve anymore because we have a long way to go. 100,000, want to 250,000, then want to half. It's a long runway to go there. So I think that is the time we are spending on the collaboration front.
And also, are there any plans for forward integration as well? I mean, we are going to produce rare earth oxides, right? So, moving into rare earth oxides to metal alloys and finally to permanent magnets, are we in plans to forward integrate?
Right now, the company will be busy with this projects for the next 3 to 4 years because even the oxide, even if you're producing 500, you have a good runway to go to 2,000. Then, if you look at all the and there's also a lot of activity by then happening in India, where there'll be mines coming up, projects coming up, refining these oxides. So, and that is where you see the value also is. That's a challenge right now. The capex on the magnet plant will be done plus or minus. They'll get some technology. These companies mostly we see active companies going backward into permanent magnet manufacturing, and they will be very aggressive. Then the end users will get there. And if you look at overall globally, the margin profile of this entire industry, even though it is on a very controlled environment, majority of the margins are taken until oxides, then every substream is a single digit margin and a high tech. So I think we're in a sweet spot, and obviously, if there is a JV in future, company says, give me certain oxides, I'll build a permanent magnet along with you. You're okay.
And lastly, regarding the Indian domestic reserve space, so I've heard a call of yours that you mentioned that you have a letter of intent with the Kerala government regarding a particular reserve of monazite, if I'm not wrong. So I just want to understand how can that space open up? Will it be confined to public sector undertakings because this is a more national security important sector? So will the government be open to private players taking up majority of the reserves, or will it be confined to PSUs? What's your outlook and your opinion?
Yeah, if you look a bit back at the history, why this rare earth space or HMS space is sensitized is because it has radioactive materials. And in India, the radioactive material in these sands is the thorium contained. And not only India, many countries around the world took a conscious call that radioactive materials have to be handled by certain agencies and in a particular way. And otherwise, there could be issues on the public health, other aspects. So it's a right move. But what has happened, the negative of that is where we are today, all the countries realizing that due to that, since usually the government corporations have their own style of working and they're not driven by margins primarily or targets primarily in this space globally, not only India, we are in this situation where we have the mineral, we want the material. So government has already taken that into factor, and they already started a lot of exercise, private companies coming and doing this work in a controlled manner. So there is a UN protocol of how you handle radioactivity there. So enforcement is the key here. So obviously they may come up with an enforcement agency to ensure that all the protocols are being followed. And luckily in India we're dealing with thorium, not uranium. If the same project was in Africa or in Australia, be with uranium. That's even more. I mean, literally 100 times worse in handling. So, given that there is a comfort right now in the sector that yes, the only way to go forward is privatization, but the monitoring and regulation will have to be beefed up. That's our view. And luckily, we have a lot of crude resources which are mined along with the other HMS projects and sold. And the byproducts, like how we are getting monazite byproduct in Sri Lanka, there is a byproduct feedstock in Kerala, Andhra, Odisha, all these states. And it's in the interest of the nation and everybody that somebody does that and takes the oxides out of it. So in that reference, yes, we have been shortlisted and we have an alloy from Kerala government, which has the largest feedstock of crude monazite as we speak. So we're working along with them. So these projects, the mined monazite, crude monazite over decades belongs to that corporation. So we will have to work with them on how to extract it responsibly and how do we scale it up and how do we share the margins with these governments, state governments, with the permission of the central government, obviously. And that is one level. The second thing, what will actually drive the whole thing to next level is opening up the mines itself. If you look at the total reserves that we have and the potential, we can not only be self-sufficient, we can supply to the rest of the world. We can become as large as China if we really want to by extracting all the oxides there. So I think that is the next big game changer. It will be wonderful to see 7, 8 companies having mining licenses all across the Indian coast, mining the sand, selling those materials, making the titanium, ilmenite, the slag, downstream alloyed industry developing, monazite to oxides to magnets to motors. I think that's what we should look at.
Please raise your hand.
Sir, you have laid out the roadmap for the next 3 years at a minimum. My reading is every year you will be adding 250 crore to the bottom line, and in FY28 you will straight away jump to 2,500 crore. Would like to have your comments on this.
So I can't comment on your view, and we will do our best.
Because you know you have the finger on the pulse of each and every activity which you are doing, and as well as the activity in Sri Lanka, the manufacturing plants, plus it's like a need of the hour basis. The mines which you are, the mining activity which you are doing involved. There are really there in India today. We can basically, as your last line you said, we can be the supplier to the world.
Yeah.
Keeping this potential and focus in mind, I thought 250, 250, and then straight up to 2,500 crore.
What I would like to add is we are, I think, blessed to be where we are in terms of the other friend was saying we have that lead and we should handle it responsibly and we will not let any stone unturned and numbers are a byproduct of that. I think that's what I would like to leave. And we as a company are aggressive. We would have seen in Natural Stone the size that we built, the scale that we built, and a highly fragmented industry. As you're going forward, we're getting into more organized businesses, more organized customers, and a much wider market space. So I think that's an advantage we have. We see it's easier to deal in those markets. And being listed now, as again I'm mentioning, we will tap the capital markets. We will not be scared of raising debt. We will be very aggressive in growing all fronts. Our goal is to see that happens one day. We actually supply this to the rest of the world. We can be small part of it, big part of it doesn't matter.
Thank you.
Hi. So you have laid out your future plans very well. You have the trajectory in line, but just wanted to understand on the risks part. that what risk do you see coming? Like these are the new verticals that you are entering in. So in terms of quality of the quartz or the expected yields from the Sri Lankan mines that you are expecting or calculating in your head, and any change in stance or policies by China, how do that will impact you? Just some color for our understanding. So.
Sure. On quartz front, I think the risks that I see going from having captive mines to our own process, even if the yields are slightly changing on the mines, the plant is equipped to take that little A, little B grade, doesn't matter. The biggest advantage that we have is normally in the quartz businesses, usually high grade quartz can be sold easily. The low grade quartz remains in the mine. And with the solar side activity in India, this project that we're saying usually won't be great in many countries. Here, it's working out well because there's a good local demand for solar glass, and that will absorb a lot of inefficiencies on the quality on the mining side. So that's how we can build large scale and projects. And so the risk is, see, solar glass primarily is being supplied by from China now, and that risk is always there. But the drive is again there from the government point of view, from the industry point of view, we should be self-reliant. So as long as that drive and willingness is there, I don't see a risk in terms of that aspect. Engineered stone is more diversified. So the trade wars can happen, tariffs can happen, but this is a product where 40 countries are net importers. So our product will move. So our product will keep positioning itself. So it will move to Vietnam, it will move to Germany, it will move to Spain, it can move to US for the powder. So it's a more mobile product on that front. Our challenge could be when we are actually planning out phase 3. Because if you look at, we spoke of phase 1, phase 2. Just briefly, the complex that we're building is for much larger volume. Our challenge primarily could be to see whether the raw material reserves we have are good enough for that. So that is where we have to start focusing on. We are good enough for 500,000 tons, 20 years, 30 years, doesn't matter. But if I really want to 1.5 million tons next, I may be maybe 11 years, but that's not enough. So that is where we'll be focusing on. So we understand that very well. That can be by acquisition, by participating in auctions, tenders. We try to secure double our resource at least. That's the goal in the next 5 to 7 years of quartz. So coming to the China side policy. So today the whole drive is to get away from it, right? And we are focusing on the upstream industry, not on the downstream industry. I see more challenge for the downstream industries with the Chinese policies. Chinese never sell oxides, so we are getting into the space. But there could be price manipulation, as we see, and that is where the PLI is coming in supporting customers. That may not be enough. Maybe the government has to do more for that. We don't know that. Today it's okay. So that's why I'm saying the backward integration of companies will work beautifully here because they'll not be seeing permanent magnet as a profit center, but they look at a supply chain, a critical supply chain that they have. Then it doesn't matter if there's zero profit also on that. So I think all that will evolve, and once we have taken this step, there's no going back for any of us. Okay, the risk, let's say everything goes back to peace, 1819, everybody's a friend, there's no trade war, everybody's shaking hands, everything becomes free. I think we passed that bridge once we have, though we wish it happens, it should happen, but in these critical aspects of rare earths, permanent magnets, the lithium supply chain, I think countries will want to have their own supply chains.
Just one part that regarding the yields from the Sri Lankan mines, that can it vary or can it pose a risk to your plans?
So we have multiple blocks there. Block to block anyway it varies. So all the numbers in this spoken are blended average, and these are naturally deposited. So there could be a variation from reach to reach, quarter to quarter, but this is an average. So I think on an average basis, on a yearly, long-term basis, we are not.
Alright, thank you.
So,
Any other?
so my name is Amit, I'm from FGO company. So can you throw some light on the number of employees of the firm and what are the safety measures taken for employees? And second question is about the exports. You said like 17 countries you are exporting to. What are the top 3 countries that you export and what are the revenue proportion from them? Thank you.
So safety is paramount for us, and the operations, especially in natural stone, where there's a lot of open cast mines. We have about, as an organization now, we have about 500 people working, and majority of them are on contract basis. But everybody is treated with equal care and equal care. The training is given to every employee, more than what is desired. And we are one of the few companies which also do simulator training. So with the vendors, all our employees are trained on specific equipment on their simulators. We pay for it, and before they're on board on handling these equipments. We also look at comfort of the employees. Most of the cabins that our employees are sitting in these machineries have an option of air conditioned, not air conditioned. Most of our are air conditioned actually. So the comfort, we have seen a productivity increase with comfort also there, and that also prevents them from exposing to open air and dust. So these are safe environment is what gives the productivity also and comfort to the people. And sorry, what was the other question?
So exports, you said you were doing exports in 17 countries. So what are the top 3 countries you export to? Their concentration.
So China, Thailand, and Italy would be the top contributors for exports. China being the largest, and India and Middle East being the fastest growing markets.
Thank you, sir. All the best.
Hi, Yashwant. Just a follow-up question. Regarding the macroeconomic demand for this light rails specifically, I mean, there are many OEMs, especially from automotive segment, there are many OEMs who are trying to diversify away from the usage of rails. Like, I think, if I'm not wrong, Toyota says it wants to reduce its exposure to neodymium by 50%, and they're going for a lanthanum and a cerium based permanent magnets, which are much more in abundance and 20 times cheaper than the current ones. So, I mean, since the architecture of motors as well as materials is changing and evolving, now should we have to temper the demand outlook for these rare earths in the next medium term to long term? Is it, what's your understanding of it?
So rare earth is a classification primarily on a periodic table, which is 17 of them, right? Lanthanum, cerium, also part of it. So the science behind choosing ND and PR primarily to make permanent magnets is quite mature. And today you want to go away from it because it's expensive. But once you move into those become expensive. So it's a cycle, right? There was no value for NdPr 30 years before. It was zero value. So what is important is, as a company, ability to produce oxides. And once you start producing oxide, you can extract any oxide. You don't need separate technology for lanthanum. You don't need separate technology for dysprosium. As long as the contained material has it, we can do it. In the Indian coast and Sri Lanka, we are predominantly NdPr with trace elements of dysprosium and terbium, trace elements. We don't have lanthanum, we don't have cerium. So the if as a company we see traction there, we will have to go and acquire those mines. But for NdPr, the entire supply chain has been based. A single company can't move the needle, and it's an industry supply chain. Right from forget about EV. EV's industry is only 28% of the market. You have a much larger industry there. You have green wind turbines, roadless wind turbines. You have MRIs. You have defense. Defense you can't change the spec just like that. It takes years to change the spec. So ideally, the easiest solution is to build that scale which is already there. You don't want to change the entire ecosystem just because you're not able to solve a problem at the oxide level. And not only that, there are companies I think working on other alternatives also. A lot of companies will do a lot of activity, but we see good traction for the next decade at least in these materials. And the easiest way to solve is get those done, and the downstream industry comes.
Any other questions?
Just one last question on what's your view on the new labor code since you have a lot of people on contract basis? How will this impact you?
Right. So the in terms of the classification of skill level, there will be a change. We are just looking at what that material change can be. Uh, Especially where they're classifying as long as somebody has certificate, he becomes skilled. Who doesn't have certificate remains unskilled. That is where we will see a major, because everybody is trained, but we never focused on the certification part as a company. The otherwise, whatever the rates are there, we are more or less doing what, because we are the best paymasters in the industry as we speak, and the attrition rate is very low. Most of them are quite there with us for years and years. So we don't see a major impact, but exact impact, I think our guys are doing the exercise. I think in the next few weeks we'll have clarity on that.
Okay, thank you.
Any other questions from anyone?
Can you elaborate the promoter group interest that this company in the business industry? Elaborate that.
So this is the company where my father is a major shareholder, and we are actively part of owning this company. Then he also holds another company called Midwest Coal, which is also a listed entity, and it is a listed entity for a long time. And that company is on BESS, energy storage side, and they are also uh, in the phase of building a magnet plant. So right now they are looking at alloy to magnet, and then they want to go beyond. Finally, the plan is to maybe become a metal to magnet plant. So that is the second. That is where he focuses maximum time along with mine. So he almost full time is there. We are here.
Any more questions from anyone? So on that note, thank you so much, ma'am. So it was truly insightful, and we were truly honored to have you here. And you can all reach out to us in case you would want to meet the management for a virtual or physical interaction at goindiastocks.com. So
Thank you so much.
I want to just inform you that heritage management is running a little late due to heavy fog situation in Hyderabad. While part of the management has already joined us. So coming to flights, I will just take a moment to kind of talk about one of our clients, SpiceJet, for which we are hosting an analyst meet on 4th of December. Request to all